yeah, just yeah, this is me. I'm Elaine from Philip Security. So just in case for those who do not know me, yeah, so been with the company for more than 20 years, and yep, if you want my contact number, you can just scan my, the QR code to save my contact numbers on your phone. Um, yep, let me begin. Wait, okay. The services we offer, Philip Security is one of the largest local booking stock broking house in Singapore. So been around since 1975. So we're about 47 years in the market, and we are regulated by MAS. So we are, in terms of our equity reserve, is very, very strong. We are a very conservative company. So we offer stocks and shares, unit trusts, life insurance, generation, managed account, and security advisory services. So so stockbroking platform, like a place where you can buy global stocks, including US shares. Let me go to the okay, just a disclaimer. I think for all presentation, we are required to say that it's for educational purposes and should not be considered as a financial advice. Okay. And market outlook for just a snapshot, of how Singapore looks like as compared to the other market. So I'm not sure. You will see that STI is up 3.1%, outperforming the other markets simply because the other markets is negative. So that's an interesting fact.
Yeah, correct.
Yeah, but then you look at the way, this year to date, right? So if you look at that, let's like, can you see the red lines like, it's like very, very flat. Yeah. So that is the nutshell what Singapore market looks like. So it's
Stable,
like,
stable.
yeah, stable. Yeah. Okay, to really and understand how Singapore will be, forward, it's very important to know about Singapore economy situations, it's an open market, and you can see that the nominal GDP has, over the years has grown, because it's, simply we all know that Singapore is well managed, good governance. But of course, Q3 GDP growth 4.1% was actually lower than first expected. So GDP, based on the statistic that was announced in November, Singapore GDP growth is expected to slow 0.5% to 2.5% in 2023. And it's simply because of weaker external demand outlook and inflation to remain elevated through H1 2023. It's really quite a fit because in view that, of the Ukraine war, Russia, supply chain disruptions, rising inflation, and yet we are quite stable, outperforming the market. I think it's quite a good, a good place, stable and a fit lah. I mean, a performance sense. Yeah. If you look at this, Singapore, interest rates, inflation is about 6.7. Interest rate is to be catch up lah. That's why Donnie is saying that now let's go for the T-bill is 4%. So you can see that our interest rate has to move up and to be closer or have to even be above the inflation rate so that the real interest rate will be positive instead of negative. Currently, the real interest rate is negative. Why? Because inflation rate is higher than interest rate. So when inflation rate is lower than interest rate, then we are in a real normal time, really, really expanding well. Otherwise, we are in a very, very not so healthy environment at this point in time. So in 2023, based on all the trade statistic, things like that, GDP growth in most major economy was expected to moderate further, as reiterated by MTI Permanent Secretary Gabriel Lim. Many central banks are raising interest rate to control inflation. As I mentioned earlier, we want to have a positive real interest rate and not a negative real interest rate. Return. Okay. look at the jobless rate market in Singapore is very low. You can see that, okay, at the high, we actually dropped back to the pre-pandemic level. So it's very healthy in terms of labor. Um, and in terms of foreign direct investment, you can see that over the years, Singapore attracted a lot of foreign direct investment. That shows that, you know, how much trust the foreign are giving to Singapore in terms of to put their money investing into Singapore. Lion City is also known as Singapore lah. Singapore is the Malayan, you know, that's why we call it Lion City. Okay, so in the first half, we actually, in terms of greenfield direct investment, we are one of the leading destination for major investors. And for the last first 6 months of the year, is about 8.2 billion attracted that much. Yeah, if you see from this graph, you know, 8.2, actually we are double that of Malaysia. Yeah, in terms of attracting the foreign direct investment. When you say attracting foreign direct investment, so we have companies like UMC, you know, and it says that it's going to invest 5 billion into a new wafer fabrication plant and research and development center in Singapore. We got French Semicon Material Soitec also investing in Singapore. We got Chinese bio manufacturing Wuxi Biology that's going to invest 1.4 billion in terms of for contract research development and manufacturing center. So actually we need a lot of talent in Singapore. If we were to build this and then, you know, for this direct, I think that's a headache Singapore has, because it's a small nation and he really need a lot of talents to come into Singapore. Yeah. And as besides able to attract foreign direct investment, we're also a leading financial center. Okay, and Singapore has zero net debt. It's actually one of the world's leading financial centers. The external debts are mainly deposit kept in Singapore banks by overseas banks and depositors. Yeah, when you go to the trading economics, you may notice that Singapore, you know, we have very high debt to GDP, but actually that is because it's not because we borrow money, but because of lots of deposit into Singapore, and we are not borrowing there, but instead we're using those investments to earn income from there as well. Yeah. Yeah. So we do not spend the money that we borrow. We also do not spend the money that we borrow under the Government Security Act. Yeah. Right. So what I'm in a nutshell, we're saying that we are very healthy and financially, Singapore as a whole. Yeah. And our current account to GDP is actually the top three, 18.1, one of the countries in the world that's in 18.10 current positive current account, has a positive current account. Yeah. And Singapore history market will not be told by, you know, we need to reference to the STI ETF, which made up the Singapore market. I pull up this from the, you know, ETF website, and basically it's saying that, you know, for $10,000 which a person invests in 2002, which is 20 years ago, today is worth about 35,000. So it's about more than 300%. Yeah, so it may show that the graph is very flat, you know, but actually the return underneath is quite substantial. Yeah, of course we cannot compare the 2000, 3000, you know, those kind of return, but it's slow and steady type. Yeah. Yeah, so based on the total return 2002 November to 2002 is this year, 2002 to November 2002, so it's about 270%. Yeah. So annualized is about 6.5% since inception. So the reason I pull out this STR ETF because for those who do not understand what is ETF is about, so basically it's a basket of Singapore blue chip stocks, and is designed to track the performance of the Singapore market performance. The fund offers the opportunity to diversify, to gain diversification to the leading company in Singapore and participate in Singapore's long-term growth potential in a single transaction at relatively low cost. And what I like about ETF, I think you guys are already aware that because it have this rebalancing mechanism, you know, it will align the any stocks that are no longer, it will evolve, you know, as the market mature, it will realign what is in the portfolio. So you don't have to worry that actually you bought wrong stocks, you know, and you have to sell, or you have to, you know, rebalance yourself. So everything has its own kick-in mechanism in there. So these are the top 10 holdings in the ETF. So it's heavily weighted on the banks. Yeah, so in the rising interest rate, though at a slower pace, I think Singapore will still benefit from it as long as the interest rate increase does not overshoot the part that it affected a lot of corporate unable to pay their loans and the housing loans as well. Yeah, so I think there's a sweet spot whereby the bank can still increase and not affecting the whole business. Yeah. And the yield for this ETF is about 3.4%. It's quite decent, and price to book is only 1.11. Yeah, and PE ratio is about 11.81 as of 8 in December. So this is STI chart. So if you can see that it's here lah, it's like, you know, sideways, you know, we are, yeah, it's above 200 MA. Okay, so in nutshell, Singapore is small but stable. So we give decent yield for Singapore market. Okay, so ETF helps you provide you a diversified portfolio, and you do it via regular investing because it's very hard to time the market. Because when market rebound, it's very hard to catch. And also, even if you catch only a tiny bit, you won't dare to go big. So the only way to grow and have a bigger pot is to do it slowly, accumulate on a regular basis. So during when market is very volatile, we may want to allocate more to fixed income with shorter durations. And then when interest rate pivot, like what Donnie says, is not rising or not, then we can allocate more to the equity. So Singapore and Malaysia. So I just a comparison between Singapore and Malaysia. So Malaysia, GDP year-on-year growth, Singapore is about 4.1%. Malaysia is 14.2, is quite a lot. Yeah. So inflation actually lower than Singapore. Singapore has higher. In terms of jobless rate, quite reasonable. I mean, pretty close. I mean, low lah. I mean, but it depends how you define. But 3.6 still, I think to me is quite decent. It's like, yeah. Population, of course, Malaysia is a lot bigger. So to know forward of Malaysia economy performance, you cannot really talk about it until you understand who is Anwar bin Ibrahim, because he's the new Prime Minister of Malaysia, right? Yeah. So if you dig into his history, in 1991, he was appointed as Finance Minister. During his tenure, Malaysia actually enjoyed unprecedented prosperity and economic growth, as a pull-up for the Wikipedia. Yeah. So if you have listened to this YouTube where he had this lecture interview with the SMU students, you know, after listening carefully to his views in the video, he is likely to impress you as the most learned, intelligent, insightful Prime Minister compared to all the past 9 PM in Malaysia. Yeah. So he gives a lot of people hope, especially the Malaysians. Yeah. In his early political career as a Deputy Prime Minister, he has taken radical steps which directly conflicted with Mahathir's policies. There's a frontal attack against widespread culture of nepotism and cronyism. So on this 1998, Anwar was actually fired from the cabinet, and many reports say that he was under investigation for this. Of course, it was clarified that there's no such thing, right? Just for political reasons. Yeah, so okay, so the reason I highlight this is because though everybody likes him, but if you rub people the wrong way, so I'm not sure whether the same episode will appear again, whereby, you know, you'll be thrown under the bus again, you know, everything goes back to square one. So though because I think in there's a lot of things, uncertainty at this point in time because of the the change of the politics and a new leader. So a lot of transfer changes. So I hope he will stay and yeah and help steer Malaysia to a good good forward direction. Yeah, so Malaysia GDP actually expanded 14.2% year-on-year in September. It is actually one of the world's largest exporters, semicon devices, electrical devices, IT and communication products. It is also the second largest volume and value of palm oil products globally. Next to the first is actually Indonesia. Yeah. So in terms of, I plot this table in terms of ASEAN GDP growth. So in terms of growth, the forward estimate forecast for Malaysia is actually higher than Singapore. For Malaysia, it's about 4%, 2023. Singapore is only 1.5. Yeah, and 2024 is actually higher than Singapore. So GDP growth will be relatively resilient in 2023. That's for the ASEAN country, ASEAN, which includes Singapore. These are some ASEAN countries. The big wildcard is China's reopening, which could partially offset the US and Europe slowdown and strengthen ASEAN economic outlook. China is Asia's largest export market, 16% of total export, and accounted for 22% of foreign visitor arrival pre-pandemic. So if China is able to open, I think our tourism, our market will start to recover. Yeah. Hopefully, but I think based on the recent report, you see in this paper, I think with the easing become worse because a lot of them was like, down with the COVID and is trying to seek medical, but there's run out of drugs and so forth in China. It's a bit chaotic at this point, but I hope the situation will be under control soon. So for the Malaysia market, I actually plotted the graph, and this is the 200 moving averages. And if you look at past history, observe past history, every time we drop here, it recovers back and it did return. And this is like low point, low point, low point, low point, and actually we are in here. So it's kind of like, there could be opportunity if it can go back up to 200 moving average for Malaysia. So in terms of how Malaysia perform against the rest, of course, Singapore is still here, gold is here, KL is at the bottom here, so it's like trying to go back up. So yep, so relatively, yeah, that's where it is relative to the rest of the market. So in nutshell, in recap for Malaysia, the new leadership gives hopes, and as for political stability, I think we still need to wait and see whether how he managed the whole situation, and whether he rubbed people the wrong way, or he because it's so politicking, right? Yeah, still got the Muhyiddin, this party trying to fight each other. Yeah. Yeah, so that's my view for today's session. So yep. Any questions?
Thank you, Elaine,
Thank you,
for the
Eileen.
sharing.
Yeah, welcome. Thanks
So
for
any
having me. Yeah.
questions maybe from Indra? Indra, do you still monitoring maybe in Malaysia market?
Oh, Malaysia market, I never touch.
Oh, okay.
Yeah, but my wife, Angela, she did invest at Malaysia stock.
Oh, okay, okay.
Okay, that's good.
Right. Then for me, yeah, the same lot, Singapore stock. Yeah, you know lah. all falling down.
Okay, like slow and steady. You earn your return.
Mainly dividend, right? For
Dividend.
Singapore market, it's
So
mainly dividend.
the foundation still there for me. Singapore stock is my foundation for passive income, just to maintain those who have generate dividend more than, for me, more than 5 lah now. Last time I still can take 4%, but now more selective because I learn thanks to Master Doni. Now learn to shift some portfolio to US lah.
Okay.
To learn for trading also lah. But the most of the portfolio still under Singapore stock lah. Basically, because cannot take out lah.
Cannot take out? Why cannot take out?
Rugi
SRS?
mah.
Rugi. Oh yeah, don't forget to save some money by contributing to your SRS account before year end.
Oh yeah,
Yeah.
thanks. Yeah, thanks for reminding.
You can save
Uh,
$2,000. Yeah.
Sure, sure, sure.
Save for
Basically,
the tax, right?
field short investment is long term. Long term investment is field short investment. If
Long-term
you fail to
investment
do
is
Failed short investment.
field short investment,
few short investment.
field trading. No, I just,
Usually.
just joke. But
Okay.
yeah, my Singapore stock is goes more on the income stock REITs and blue chip lah.
Okay. The banks lah. Yeah.
Yeah, so just enjoy dividend no.
That's good lah. Good, good, good. Yeah. Remember to reinvest back lah. Yeah. Reinvest back. Yeah.
Yeah.
How about with
Now US also plunk in all drop, so nothing can buy. But what Miss Ellen just now say, the FTI ETF will be good lah, because now the price is drop, right? So we can buy more
stable.
units the same
It's-
price,
Yeah.
like
It's
cheaper,
just stable.
cheaper price.
Yeah. Stable. Yeah. Correct.
More stable, right?
For
Philip Capital, Philip Security has the STI reinvested, right?
Yes, correct. So for those who there's a regular saving plan, where you can save like let's say $100 per month, and it's just an auto saving for you. So then every month whatever dividend collected, they reinvest back into the ETF for you. So
Auto lah, auto.
yeah, auto, correct. Yeah, you can
How
set
much
up that.
this one?
I think it's only a couple of dollars, $1, $2 for the service, the admin fee. That's all. Yeah, a couple of dollars. Yeah.
It's like the from the stock market, is it? Or just with we invest $100 per month, and so minus $2 or $3, then the 97 become can buy the STI ETF lah.
Yeah, it's just like let's say it's $100, they will go in to buy every 100, then they will charge $2. They will gyro deduct from your bank account, like let's say 102, whatever. Yeah, 105. The admin fee, but of course you may want, but you can stop anytime if you think that you don't want to continue. But for long-term investing, it's always good to accumulate on a regular basis rather than stop at any point in time. Yeah, so yeah, so you can have 100, 100 is one counter, so you can choose 5 counter will be $500. So it's minimum lah. Minimum is $100. So you can 500 to 1 counter, 500 to 5 counters. Yeah. So there's a pick. We have a list of stocks that's that pre-qualified to be under this list. These are good strong counters. Yeah.
Oh, so not only STI ETF, can be like
No.
OCBC, DBS.
Yes, correct. Yes, can be. Yeah.
So Miss can buy the $100 DBS lah.
Can. Yeah.
Because no need to wait until you get $2,000 to
Yeah,
buy
no need.
the
Yeah, no
DBS.
need. Yeah, no need. Yeah, you got odd lot lah. Give you the small odd lot quantity. Yeah.
Good. If we say Indonesian, like those stay in Indonesia, like the Valentino, how to
How
buy
to
from the Philip?
Actually, if they what they can do for because we have a cash plus account, the brokerage is actually very low. So our system allow you to do a recurring buy, a recurring purchase. So you just have to make sure you fund your account from, let's say your money is Indonesia, you can transfer the money to your trading account here. Let's say you put $1,000, so you can set in the system that every month to buy for you $200, $100 from the $1,000. So just remember lah, after 10 times you will use up your $100, so you must top up money. Yeah, but there'll be the fee for local stocks is about 0.08%. Yeah, but no minimum lah, 0.08%. Yeah.
Oh, so can buy the STI ETF using your cash account.
Cash plus account, yes, can.
Yeah,
Can.
Okay, interesting.
Mm.
Valentino, you got any question?
Okay, thank you, Don.
Okay.
For Donny and Elaine, thank you for the opportunity. I want to know the general view of general investor or from Philip Security. What if the Fed already slowing their rate hike from probably there's an opinion that the Fed next week is not going to rise the rate hike as high as the previous one, probably only to 50 basis point. What if your general view, is it something good or something's is going to be bad, or is it just wait and see?
Mm. Well, uh, sorry, how do
Valentino.
Valentino, hi. Yeah, thanks for your
Yeah,
question.
sure,
Yeah,
thank you.
I think 50 basis point is expected, but the generally, I think, that has been a good news based on the last announcement by the Fed. But of course, the we are still looking at the interest rate. How stubborn is the interest rate, right? So, because initially it was about market is talking about 75 basis, but the last round was about 50. So that was already quite good news. I think the market rebounded as a result of that, right? But then subsequently, the economy is doing very strongly. The labor market is very tight, things like that. So I think that's but of course it's countered by the fact that Twitter, all these things are retrenching people, things like that. So but I think a lot has to do with has to very much look based upon the, I mean, my view would be on the inflation. So as long as inflation is very high, our Fed fund rate is lower than the inflation, and this thing doesn't balance and come back up whereby interest rate is like at least higher than inflation, we will still be interest rate will still have to rise, to the level that we finally have a real return. That's my view. Donnie?
Yeah, usually
Okay,
I
thank
see
you.
the market, the historical data. So whenever there is a announcement, right, I quickly see the market at the point of time. Usually the market rebound, bull on the past, on the date the announcement, and also at the next day. Then after that, come back to the dropping lah. It's like that. So means 0.5 50 basis point is good. Is because it's slowing down the rate, but after that again it is not big pivot. So we need to see the pivot. Of course, there is a rebound, market rebound, then because it's good news, but eventually there will be another what scenario whereby inflation still not as a target. Then after that, like I didn't say strong economy. Yeah, it's very funny. I mean, it's very interesting because the macroeconomy is still strong. The unemployment rate is very low, and also the production rate is very high also. It's very interesting. So it's like the counter means there's no clear trend is inflation is lower, but all the macroeconomy is still strong. So we see. I think still need to wait until pivot to be safe lah. Of course, there will be another like the Santa Rally, the once a while then rebound. Yeah, but generally look at the chart. Still look at the chart. You see the SPX still cannot pass through the SMA 200. So means that still waiting for pivot.
Okay, thank you. But it's probably it's good news, but we still got to be cautious about that.
Great.
About everything.
Volatility is still there.
Yeah, okay. And what about we know that since the early of this year, the tech sector is really hammered. And is there any sector that probably really waiting for the Fed to be kind of slowing the rate hikes? Any sector probably?
Sector. You know.
Yeah, I mean like commodity or tech, or is it just general?
I think okay. Usually, right, if let's say those that rebound first, right, is usually the big tech, like the Apple, the most stable, so the tier one. Those, because it's already profitable and there's a very low debt, so the interest rate hike doesn't impact them so much lah. So this is the one that first rebound. Then after that, later on followed by the all that still making loss. But this one I don't think can rebound soon. Those that like the Palantir lah, or what's no, it's not Immo, the Palantir and all the loss making company like the Grab, etc. lah. I mean all those tech company that still lose money and also having the high revenue growth but high debt. So this is the one that is difficult to rebound until next 1 year.
Okay.
So just to, if I say you don't want to wait until by Fed, right? So maybe you can take a look at the tier one tech companies.
Okay. Thank you, Elaine. Thank you, Don.
Maybe Elaine, you have any question? Any answer?
Yeah, rising interest rate, I mean, as we know that is benefiting the banks, especially for Singapore. So I'm not sure whether that will help with your questions. Like, what are the sector that is likely to benefit it? Yeah. So a lot of family office, the high net worth super, they actually cause a rally in the bond market because they have been like sitting with a lot of money but looking for yield, very hard to find. So with the rising interest rate, like T-bills, all this thing, they are all going into the bond market. So in terms, it's like even when interest rate pivot, there are people will be locking in for a higher interest rate in the bond market so that it will last them, like, let's say 5%, 6% for 10 years. I mean, you'll be very happy with that kind of like fixed their rate, like fix their housing loan, fix their borrowing interest. Yeah. So so these are a few areas and that what else that will benefit. Yeah, those company with a lot of cash, I think they likely to benefit because their money sitting doing nothing now can find a place where they can produce some little bit more return for the shareholders. Yeah.
But interestingly, when you look at the finance sector in US, right, all bearish, like.
Yeah, that's I'm aware of that. Right? Yeah, interesting.
Yeah.
Except for Singapore.
by theory, right, supposed to be bullish.
That's the question I want to ask. If the interest rate go up, why the banking in US is bearish also?
Well, I think maybe the US market think that they have a lot of like debt, having a lot of bad loans.
Yeah, true. Maybe
yeah.
Because of less qualified.
Yeah. Except for Singapore.
But Singapore sometimes loan to the like the China companies that eventually will go bust.
Okay lah. Because of the Singapore banks, their capital, required like is quite they're very prudent also, and they have done like a non-performing loan. Also, the last round not that bad. Yeah. So on all, I think they are in terms of governance, they are well managed lah. Yeah. So far lah, thus far lah. Yeah.
Yeah. I'll say in the chat that is maybe it's a very sentiment. Yeah, correct. Maybe I agree. Very sentiments because US even financial sector also following the general market. Like not Singapore. DBS now is bearish, right? No.
A bit. Yeah. In terms of technical, you mean? Yeah, it's like coming down. Yeah. Yeah. But DBS is very unique because you have this crypto exchange. It went into a new frontier that the rest are not doing. So, and because it's government backed and it's one of the largest, everybody have to do business with them. Foreign direct investors have to do business with them. So it's like they have like all the advantage. Yeah.
So
And they pay
the
quarterly dividends at 4
oh yeah,
percent. Yeah. 4%, per annum. Yeah.
true.
But the chart is coming down lah, huh?
Yeah,
Yeah.
correct. That's why I say.
Yeah. Wait for good opportunity, then get in and get better
Yeah, correct.
price. Yeah.
Indra, DBS, Indra, please put inside your watch list.
Yes, always on my watch list.
Oh,
Always
okay.
good call.
But I prefer OCBC because of the cheaper, valuation. Like the PB is the lower than the compared to cheap bank.
Yeah.
But maybe smaller lah.
It's smaller, but also like OCBC lah, like what you say, the valuation, I buy all three.
May as well buy ETF lah because
Yeah,
all three is the
yeah.
same, right? 3 already 30% already.
True,
35%.
exactly. Yeah. Hmm.
Yoso, you have anything or want to know? How about the rates? Rates in the interest rate high environment, I think it's quite.
Yeah,
For
I
those
think it's
that high
still
gearing, right? High
yeah,
gearing.
I think they're still affected in terms of like the financing costs or this thing. They're affected. But of course, when it affected, that means that when the share price come down, it's also an opportunity when interest rate pivot, right? So yeah, so it does, let affect first, then we can buy cheap. Yeah.
But surprisingly, they never cut the dividend. Amazing, right?
Yeah, because the top line went up actually because of the COVID the opening, right? So actually so far I observed their revenue go up to negate the borrowing costs. But if interest rate keep going up, then I'm not sure it would negate enough or not. Yeah, negate the rise. So but it affect the valuation. Yeah, because even though the whole thing top line and the bottom line interest rate rise, right, it negate each other, but when it comes to a REIT valuation, it's based on the cost of capital, right? Yeah, capitalization cost. So interest rate rise, that means that people will value them less because you can go and buy bond that offer a REIT offers 6%, another bond 6% without taking much risk. Then of course the bond is better, right? Yeah. So yeah, it's a asset class change. Yeah, that competition. Yeah. So at this, as long as interest rate is rising, it's still affected lah. Yeah, the REITs evaluation. Yeah.
That's why the good things maybe just T-bill.
Hey, do you apply the T-bill last round?
Yeah.
Hey, you did? Do you get?
No, I didn't get.
Oh,
Very difficult to get.
No, you use the non-competitive bid.
Oh.
Choose the non-competitive.
Non-competitive means
That means any price.
Oh, means the lower yield lah.
No, whatever like the auction, whatever the rate, you will get it. That you agree on that. Let's say the auction they get 4%, you get the 4%.
Okay. But competitive means what?
Competitive means you decide
4%.
at what price you. Competitive means you decide what you only want to what yield you want. Yeah, if it's less than this yield, you don't want. Yeah.
Okay.
So non-competitive is like what market order like that lah.
Okay.
Yeah.
Okay.
Yeah. Yep.
Any other things? Let me know. Yourself.
Okay, thank you, Don. Can I ask another question?
Okay.
Yes, please.
Okay. Like what Elaine just said from her presentation, that China holds a really important part in Asian economy. So while since the beginning of COVID until now, they are still holding back, like keeping continuous lockdown and another lockdown. And they are recently the government in China already said that they are trying to ease the restrictions. Is there any indicator that we can see that China is already open up, trying to produce more try to boost their economy? Is there any indicator that we can use to see that we can see?
The indicator will be the China market, the stock market performance. I think that's one. There's a forward-looking indicator. I think recently the market has there's a recovery from the bottom. So I think that's one. I think from the tourists, you can see for yourself any tourists arriving from China. Yeah, I think there's a couple of indicator from I think there's two indicator that we can see easily. What else? What else, Don? A newspaper.
News lah,
Yeah.
newspaper. Yeah, but again, I think they focus on domestically first. That's why if let's say you see the news, right, they're using the terms dynamic restriction, COVID policy. Dynamic means they will change according to the situation at the time. Because once they put, okay, we open. So after that, suddenly the COVID cases are on the rise, right? So after they difficult for them to close again. So that's why they use so-called the terms dynamic. So it's open for them to change anytime. So I think because my colleagues is from China, so she's so happy because she can go back to China next early January with the 3 days quarantine in hotel and 3 days at home. So before that is need to be total 10 days. So with that is cutting the numbers of days. But this is domestic only. But for the foreigner, I think still need to wait because now they very difficult. I mean, now I saw the news also going up the cases.
Okay, thank you, Don. Thank you, Ellen.
Okay, thank you. Thank you, Felin.
Yoso, any comment, Yoso, maybe?
For me, okay. No problem.
Iloma.
Yeah, I don't really play much on the Singapore. I just buy a long time ago and then save a long time. I bought Singtel and what else? Oh, your share, what is the name, Don? I forgot.
Micromechanics.
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 I forgot already. I never touched.
But it's good, is it? Micromechanics.
Yeah,
Semiconductor is good.
Semiconductor local. Yeah, it's up what 100%, right? The value since we buy. Yeah. So yeah, like you say, Singapore very stable and long time growth. Like you mentioned, 20 years become 150%, right? Yeah.
300, close to
300. Sorry, yeah. So yeah, so maybe just for now, I don't have any idea to buy from Singapore.
Buy STITF lah.
Yeah,
no need to choose one. No need to choose.
Yeah.
You buy the whole market.
Yeah. Maybe
what the Raffles
maybe
Medical?
safe player. Safe player. Yeah.
Okay. The medical sector, like the Raffles Medical. What do you think, Edin?
Yeah, it's also one of the recommended stock pick by DBS actually, and a couple of research house. Yeah, so I think if you look at the footprint, the Raffles Medical, they have insurance business as well. They have a lot of foreign patients, so they're well managed in China. As long as China side is opening up, and yeah, things will be better, like for Raffles Medical as well. So yeah, things are picking up. Yeah.
Because the medical industry in Singapore got two. One is Parkway Place, right? And the other one is Raffles Medical, right?
Raffles Medical, you got Singapore, the small SingHealth.
The one that in the Singapore market.
Singapore Medical, but they are quite,
OG also, right? I mean the OGS.
But they're different because Raffles Medical is quite a big establishment. You have this Raffles Hospital, it is and Parkway is like the REIT, and Yeah, then Glen Eagles, all these things is they are in the same league lah. Yeah. Yeah, so I quite like Raffles Medical because of its footprint in China. It has insurance as well. You know, he has some insurance, right? A lot of so with the network ecosystem, they're able to capture quite strong patient to their clinic as well. To the so yep.
Especially for the medical tourism, right? I mean, a lot of Indonesian people come to Singapore to seek medical treatment in Singapore.
Yeah, it is. But my first medical quite expensive, Yeah. You
But
if you yeah.
there is nothing for Indonesian, right? I mean, Indonesian people still going there, right?
Yeah, I remember when I was not well, when then you say, oh, must check this. We don't know what is the reason for your this condition. I think you need to do this A, B test, C test, D test.
Oh.
Wow, I see. Wow, you want to earn so much money for all the tests. Then I say no need, no need. That's how they make money.
Yeah. But after that, I think there is a competitor from Malaysia, like Penang,
Oh yeah.
a lot of Indonesian, rich Indonesian people go to Penang instead of Singapore.
True,
I think
true.
quite competitive lah.
True. Singapore can be quite expensive when they come here lah. Yeah. So, but then there are still people prefer to come here because of the stability, our healthcare system, the quality. I think that's a lot of reason why people want to come to Singapore. Yeah.
Safer, right? Yeah. And also can go casino.
Yeah.
Okay. Any other things? Irene.
Oh, you're welcome.
I think yeah, I have no further comments or questions. It's already very enlightening for today's market update, be it in for the US or Singapore and Malaysia. Is I think it's a good session to combine all these three markets together, and we can discuss.
This is a good session. Thank you so much, Donnie. Thank you so much, Ari, and thank
so
you
much.
the rest for
Thank
attending.
you. Thank you for sharing.
Yeah,
Thank you.
everyone, thank you.
Thank
We'll
you.
meet
Thank
again.
you.
Thank you. Thank you, everyone.
Bye-bye.
Thank you.
Bye. Thank you.
Bye.
Bye.